And welcome back to the weekly report. Honestly, in the last week and a half, I made more than I probably did in the whole month of December. Actually, I know I did. And that's what you call a hot streak. Lots of other members in the Discord have been sharing their profits as well. It's been a wonderful week. By the way, if you missed the last YouTube video, you're definitely going to want to check that one out. Just click on my channel. It'll show you all the most recent videos and click on the Fed pivot will not save the market. I think it's really important, especially a day after today. I timed that video for a reason. Just like I was tweeting on Twitter, come last Friday even, I was saying I'm starting to get short, I'm getting short. Hence, today, capitulation. So let's talk about that. This morning, the PPI numbers came out showing that inflation's definitely taking the backhand, but then the retail sales came out and showed that the economy is as well. These were lower than the consensus, and the market didn't like that news whatsoever. And then we had the Fed speakers as well, causing the market to completely melt down the entire day. The consensus definitely is the Fed is over tightening on the market. Now, before I get all doom and gloom, one of the things that we also have to recognize is the jobs numbers are still really good. Like, it's surprisingly good. A severe recession is not a possibility if these numbers continue to hold up so well. And right now, the consensus, which I think is pretty accurate at this time, is that we're only going to have a mild recession. This is actually pretty surprising for me. Last year, I was definitely expecting a quick, severe recession. I was more in the consensus with Raoul Powell. But now, I think I finally moderated over after seeing a lot of this data come out. Now, remember, a lot of this data is backward looking. It doesn't indicate what the future will look like. But right now, even now, at this point in time, I was expecting the data to be worse than it is. So I have to say, I'm in the mild recession camp right now. However, that's not going to save the market from the lows that are likely coming about. We've seen this pattern before, right? We've talked about it in the video earlier this week. And we can see that we had pretty much a perfect breakdown from the top of this trend line. You can see we tested it once, but no honest breakthrough. But, you know, I was saying in the last one, this could be bullish. This could be the breakout point at which we start to make another bullish run. And like we talked about in that video as well, it wouldn't be that ridiculous to see during a tightening phase where the market decides to melt up. But we're already seeing a breakdown of trend as we're seeing that the economy is indeed heading to a recession, meaning that we could be at the later end of that cycle. Now, given the time frames that we went in that historical analysis, that would actually make sense for the market starting to melt down. Now, I would expect us to see a bottom until the midpoint of the year. But at this point in time, we're just going to need to follow the chart, and this could be making a visit down the 350 or maybe even 320 as well. And if we off track real quick and just talk about Bitcoin, we also see that lots of people thought that this sell-off today was related to some news with the DOJ. Now, that news was a big nothing burger to the point that I'm not even going to really talk about it. But we saw that lots of people were saying, oh, this news is nothing, and they bought right back in. I think this was such a bull trap. This is one of the most obvious bull traps by people who think that the news cycle is going to rule crypto. Not at all. Just look at this chart. We're still way overbought on the daily. And I think we're headed towards the upper 18,000s. But honestly, all in all, if we do look at the way that this is developing, this could be a better trend for Bitcoin by the end of the year. If the lows do come at the midpoint through the year, we could see some recovery here. And even in the shorter term, let's say heading into the middle of the year, if this actually develops into, if we get a better view here, this could be your wave one right here, followed by a wave two to the downside. And actually, let me draw these lines here real quick. We're usually better about this. I usually have this pre-drawn. Wave two right here, and then wave three. This could be a sharp wave four down, and I'm not drawing actual levels, but just to give you a visual of what this could look like, we could see something like this. A nice 5-wave pattern developing right there over a decent time frame. So a quick pullback right here and then retracement back up. I wouldn't be, that might set up for a very bullish trend into the end of the year. The only thing that I'm looking for Bitcoin to really be, solidified behind this bullish momentum is I want us to get over this hump. This is the FTX crash. We can actually manage to get above that. I think the rest of the year could look pretty good. And again, this is just one potential. I think it's the most likely outcome, which is why I'm going over it, but I think it's going to be really important to watch this in the short term. I think that, even though this is playing out, I think we could see an ABC correction for the midpoint of the year, the lows, and then into the year, a rally up to new highs. And now let's get back on track with what's going on in the market. We had the severe capitulation today. Almost no buyers coming into this market. Looks like some people tried to catch the falling knife into the end of the day, but then the market continued to sell off more. Now, what's important to keep in mind, though, is what news is going to come out tomorrow. And that's these job numbers. Remember, we already talked about these job numbers have been surprisingly good, making a lot of people say, well, this is just a mild recession. The Fed might see this as, hey, we can safely land this. It'll be fine. Let's just pause for a bit and not ease for the market and be late like we love to be. But look, what's important here for trading is if those job numbers continue to be strong, we could see this market rally up, test this trend line to the upside again, and actually get a breakthrough. But don't forget, we're also heading into an earnings season. So with the important economic news coming out tomorrow morning, then we have pretty much a week before we get any more important data. We'll get some GDP numbers the next Thursday. And during that time period, we'll also have the earnings season. We have this market at this weird level where it looks like it could maybe rally up or it could sell off, and we're coming into an earnings season where we'll probably have some wild, highs where companies are outperforming, doing well in the recession, and companies that are doing terrible. We could be setting up for just chop. And I think that is the most likely outcome right now to kill as many of the traders and investors that either position themselves long or coming in super short is just chop. But while equities might be heading for chop city, bonds have been looking strong. And these trades, buying in this dip, has played out really well. Very happy with our bond performance. There's even some traders in the Discord that hold January 2024 calls, and they're saying they're not going to sell no matter what. Honestly, I can't tell you it's a bad idea. Sounds pretty good to me as well. Bonds by the end of this year might outperform stocks. I think it's really important to keep that in mind. But the other thing that I think could be outperforming stocks this year is energy. Lots of people are getting short on, I didn't mean to click on XLE, on USO. One of the things that's important here is we're seeing that we haven't broke that neckline on that head and shoulders, which was a chart that I posted both on Twitter and in the Discord. And we're seeing that there was some capitulation today. It did trend with the market and sell off, but we ended the day still at a pretty bullish RSI at 55, a very healthy RSI. I am still in a long call position here. We actually re-entered the position. Definitely some turbulence in the short term, but I think with China continuing to reopen, I still like this position. Now, what do I like more than oil right now, though? Is going to be not CarMax. We're going to switch this up. Shout out to Value Homie, one of the Discord members who made 55% of his CarMax puts today, though. He posted that this morning. I gave that a look. It's solid play. Well done there. He's also been on a huge winning streak. Next year, by the way, we're going to do awards, Nobel Trading Awards. We didn't do them this year because someone mentioned it to me in January, and I was like, oh my gosh, that would have been a great idea. So there'll be awards and prizes for Discord members, traders who've seen the most development or had the best performance over the year. And the consistency is going to be judged by me because I see everything that happens in the Discord. Maybe me and the moderators will do a vote on who we think are the top 3. And we're going to have prizes. I don't know what I'm going to give you yet. Maybe it'll just be straight up cash. I was thinking about giving away cryptocurrency or even some stocks. So, yeah, maybe put down in the comments what you'd like to win. Anyways, what I like more than oil right now is not, I just typed USL, I'm kind of scuffing some of this report today, is UNG. UNG has had an incredible sell-off, but we're still in a energy super cycle from everything that I'm looking at. All the data, the reopening. Okay, the recession is going to be mild. If a recession's mild, energy is going to be strong, okay? Especially if Europe starts to recover. US, Europe, China. Those are like your 3 big pillars of the global economy. Europe's not doing so hot, and their energy prices are spiking. If their economy starts to also recover as the global economy recovers, they're going to also pull some demand. I feel like not enough people are talking about that. Everyone's focused on China, but Europe will eventually recover. That demand will eventually come back, and it could happen over the course of this year or next year. Either way, I still think we're in this super cycle, and China has already begun to reopen, and the US might only have a mild recession, and UNG is incredibly oversold and seeing some consolidation at these levels. I think that in the short term, we could maybe see some turbulence and this come down. I think that will be able to let me DCA, the dollar cost average, on both my option positions and my stock positions. Remember, in short-term options, you don't want to average when you're losing, but on long-term options, you can, especially in my opinion, when it's on entry. If it's on entry, okay, I need my fundamentals some time to play out, so I'm going to start small and I'm going to slowly build that position. That's exactly what I'm doing here. My convictions in UNG are actually higher than my convictions in USO, just because I love coming in when things are oversold and just being a contrarian. It's one of my favorite things to do. So I think with all the fundamentals here, we are likely going to see a quick gap up to 13, and in the longer term, over the next few months, I would love to see us actually reach 15. That's a good 50% return on the stock alone. And on the downside, I only see us coming down to 8. That's some great risk reward. That's what you want to see for your trades. And if you want me to do a video at the end of this week covering what's going on in the earnings season so far, maybe do some more specific company analysis, because we've been doing a ton of that in the Discord. I mean, we've been talking about Disney, Microsoft, Google, Bed Bath & Beyond. We talked about Under Armour, Jumia, which is the German Amazon that operates in Africa. Yeah, we've been talking about a lot. So if you want me to do another video about those specific companies, like the video, okay? This doesn't get 10 likes. You get no video. End of story. So like it, and then I'll see you for that video.